All right, everybody, welcome to the Mansfield Buzz. We build the buzz about Mansfield business. We have Julie and Michael Standard with us. I'm going to introduce them in a few minutes. Let me get back over here. I'm multitasking today. If you notice, there's a missing person. Jordan confessed to me this morning that he accidentally double booked an appointment and he is going to be late, but he may show up. So, anyhow, yours truly, Hurdy Burke, one of the hosts on the show, will be taking over today. And before we get started, let everybody know the best place to watch the live broadcast and the archive podcast is on YouTube. I just posted the link below, and I'll have it posted up on the channel. We'll post it some other places so people can find the broadcast. But we need subscribers, so it's a brand new show. I will tell you that we're really fortunate. We've had 19.5 watch time hours in short 4 weeks, so we're real excited that the channel is growing. And we want you guys to go over to that. Our usual hosts are, of course, Jordan and Hurdy. And you see Jordan's not here, so you have no idea who I'm talking about. But you'll see him soon because he'll be here. So, with that said, we are also on every single Thursday from 2 to 3 live on YouTube and the Facebook group, the Mansfield Buzz on Facebook. So do this. If you're interested in being on this podcast, like you see Julie and Mike over here, right? Then all you have to do is there's a link inside the Mansfield Facebook Buzz and you can click it, but I'll send it out to folks. So if you're interested, we'll talk more about it next week at the Mansfield Networking Group, which, by the way, I want to give them a shout out because we had 76 people yesterday. If you're a business in Mansfield, Texas, and you want to come to a very good business networking group, Dirty Job Brewing, 2 to 3, well, from noon to 1 every Wednesday. You can get there 11:30, order your food early, come socialize, and then we do some one-to-ones after. So come join us at Mansfield Networking. Well, let's welcome, and let me put their details up here real quick. I'm going to show this for a few minutes. This is their website, but let's welcome Julie and Michael Standard. And okay, so I always have to welcome, by the way, guys. So speak up, say hi.
Thank you. Great to be here.
Well, we're glad to have you both. And, we always have to have a few icebreakers, right? Just to kind of get everybody loosened up before we dive into these questions. First one is, Julie, I'm going to ask you, okay? So, high school, do you remember that far back? I'm sure you do.
Just barely. It's been a minute.
Just barely, okay. And so, what was your vehicle? Do you remember?
I drove my dad's little Datsun orange 4-speed pickup that did not run great.
But it got you from A to B.
It seemed correct? To. Although when I think about life now, I would never want my kids driving that. I'd be terrified they would be stranded somewhere. But evidently my parents had no such concerns about me.
And a lot of people may not know that Datsun is now Nissan. Back in the day, everything was called Datsun, right? And so favorite color, and then we'll get started. I always ask what people's favorite color is.
Mine is lime green.
Oh, wow. Okay. And there you go. Lime green. That's
How about you, Hurdy?
Blue.
Blue. Okay.
I'm blue. I always have been. Dark blue stuff, maybe dark black, but blue's the favorite color. Dark blue, not blue. Almost black, blue. So blue.
Okay.
Thanks for asking. There you go. I like it when it gets reversed on me.
Well, I like to know. I forgot to ask what kind of car you drove in high school, but
a Pinto.
A Pinto.
Nice.
A Pinto. Nice. 4-speed.
Okay.
And I tried not to get crashed into the back end, right? Because they
no kidding. Hazard. That was a coveted
and I did drive another car. My dad restored a 1959 Bug-Eye Sprite, and I did drive the little Bug-Eye Sprite around, the little 2-seater, 4-speed. And Bug-Eye Sprite, the headlights were popped up on the front, right? Slide windows, low to the ground, couldn't be seen. I mean, you could drive through an intersection and somebody went, was that a car? All right, guys. So I want to jump in. We're going to get into your questions here in a minute. But before we do that, we'll answer how did you get started in the industry in a minute. But the interesting thing before we start talking about the HECM loan program you guys offer, Hero Loans LLC is your company. Right. Please, somebody jump in and tell me where you got Hero Loans LLC.
So it's an acronym. It stands for Home Equity Retirement Option Loan LLC.
Glad I asked.
In our industry, it has a lot of acronyms: HECM, just FHA, HUD. And when you say HECM, you say home equity conversion mortgage. People look at you like you're crazy, or is that a reverse mortgage? And so I thought that, in fact, our industry would I'll probably have to trademark it. Somebody said multiple times, Hero Loans, that's a great idea, home equity retirement option, because it allows a senior to use their equity to retire. Right?
Yeah, I like that. And I would have never known that till you just told me what the last four, the ERO standing for. That's pretty cool. So I'm glad I asked. Great question. So, and the next question before we get started, because we are talking about HECM loans, and I've heard these terms being thrown around a lot: reverse loans. Is it a word salad change? Did something change in the wording? Is that what they call it anymore? Because I noticed you put HECM loans up on your questions.
Yeah, because that's a technical name for the loan. And let me just, without getting too far down the path.
Okay.
In 2017, if we can remember back that far, there was a gentleman who got into office who was not a politician. He was the new president of the United States, and he put another person, a lot of people in power who were not politicians either. And Ben Carson became the head of HUD, Housing and Urban Development. Ben Carson looked at this loan, and he knows people and he loves people, right? He's probably, along with Trump, he was probably one of the first people to donate his salary to charity.
Yes.
He didn't take any income. Well, he said, we need to fix this loan so seniors can use their equity to age in place, to use in-home care, and not go into a nursing care facility, which is very expensive, because Medicaid then takes their home. He said, we need to help seniors age in place so Medicaid does not lose their home. So they killed the reverse mortgage name. They came up with HECM, okay?
Right.
And they kicked all the banks out of it. So it's not a tool for making money or for the federal government to make money. It's a tool for the federal government to help people save their homes.
And you just helped me by saying HECM. Now that I have an actual way to pronounce HECM, I feel much better.
That's also an acronym.
Home equity conversion mortgage.
HECM.
Right?
I like it. Okay, so you guys your top producers gave me some great questions to ask you guys, just so you know that, okay? And the first one is, obviously it's up. How did y'all get started in this industry?
Oh, I got started in the industry. I can't even think how long ago it's been. I went to work for Pacific Residential Mortgage for my cousin, and I did marketing, business development, event planning, that kind of thing. For years, I worked for her. And then I took a job as a transaction coordinator for a real estate agent in Washington. I'm a licensed agent in Washington, and essentially did his paperwork. Not a good fit for me. I'm more of a people person. And as we kind of, kids kind of grew and Michael's business grew, he said, instead of doing this for somebody else, why don't you come do it for me? And that's how I wound up working for him.
And it's a good partnership, right? There you go.
Yeah, it's a good partnership. Perfect. Yeah.
We work well together for sure.
Yeah. Absolutely. Yeah. And I was going to say, it seems like in a business like this, you would need to have talks and collaboration and one set working with this type of client and the other. That's good. So it takes away some of the tasking, doesn't it? All right. So,
you want to hear how Michael got started before we move on?
Yeah, I do. I want to know. Michael, how'd you get started in industry?
Wow, it's a good question. So when I started wet behind the ears as a stockbroker for Bank of America,
right,
the one thing I liked was the seniors I worked with, and they would come in the office after we've done transactions, and they'd sit at the desk and they'd tell me how many fish they caught. I'd find out where the best fishing hole was at, right?
Yeah.
How to make berry pies, how to raise kids. I loved working with the seniors. They didn't have a lot of money, but it was so much fun, and I learned so much.
Yeah.
And so on the story goes, I left the brokerage industry because I'm not good at politics. And they didn't like that I wasn't doing what they wanted me to do, even though I made them. I was a top producer for them, but they just didn't like me, which is fine. And then I landed into the software industry, and that was in an airplane going all over the nation selling software to banks and broker dealers. And then I just got burnt out. I'd had enough with bad bosses and people who,
Yep.
have to make a quarterly bonus. So they do what they need to do to you to make that happen. And I just got sick of it. And so I found this through a coach and a friend of mine who said, you should talk to my brother who does this. And he explained to me how it worked. And with the financial services, for stock brokerage background, I understand numbers and financial planning. And I was just blown away. This is a tool that if people just take a half a minute to understand it, it takes that dead equity in their home,
Right.
and puts it to work for them. It's like you take your bad employee and you put them to work for you, and then you live a better life in retirement, right? But equity, dead equity is like a bad employee. They're sitting there on the thumb doing nothing for you, right?
Yeah.
So, and you can take your funds out and do whatever you want with it. Please don't gamble it away, but do something smart with it so you live a better life in retirement. So when I saw that, I jumped in with both feet. And I've loved it ever since because I get to help a lot of sweet people and make their lives better.
Yeah. So your mission is not just about the money side of it or just the loan. It's actually helping the seniors, which you focus a lot in your questions, which leads us to, and there's common misconceptions, I'm pretty sure, and what clients do and don't understand about these HECM loans, right? So now, Julie, you kind of stumped me on the last one. So both you want to have an answer on this question, or just
I
one of
can
you?
name a couple.
So how do you address those?
Well, one of them is a lot of people think you don't keep title to your house and the government takes your house, which is not the case. And I think a lot of seniors want to give their home to their heirs, their kids, whatever, grandkids, and they think they're going to lose their home to the government. And that's not the case. They keep the home and they can pass it to their heirs. They also aren't aware many times that you can use this tool and never make another mortgage payment, which frees up your funds. So if you're strapped for cash, maybe a credit card debt, and maybe still have a mortgage, you can pay off your mortgage, pay off your credit cards. I mean, depending on equity, right? And never make another monthly mortgage payment. And that gives you your fixed income is easier to live on at that point.
Yeah.
So those are a couple.
And there's another myth. It's called the myth of Sasquatch, right? Everybody thinks Sasquatch is real, I guess, when you mention a HECM loan. They're like, oh, they're bad.
Don't get me started, but go ahead.
So our job in calling is to kind of overcome all these myths out there. The other myth is this, she covered, you pay no more mortgage payments, you keep title to your home, and when you die, your kids get your house. They have 12 months to sell it, and they keep the equity, right? After they pay off FHA. The loans, here's the other myth. They think the loan rates are higher. The loan rates are usually about 1% lower. The federal government is not looking to make money on this. They're looking to make sure people don't go on Medicaid.
Yeah, gotcha.
Yeah.
So my question that leads into that misconception is that I guess people think that there's not time to get things settled after they inherit this property, right? Or this home. So they do have, how long was it? 12 months, you said, or up to a year. And then they can also negotiate how they want to pay that loan off or whatever. But there's not this quick turnaround. You're out. Right. Okay.
Right.
I think that's what you hear from a lot of people. They worry about what happens to the house after the person leaves, right?
Yeah.
Gotcha.
Well, the benefit is, and it's very legal in how the process works. You go through title, there's a lawyer involved. They have 6 months technically the first time, and they can get extensions for another 6 months. I've had a client whose dad had a ranch. It was a big property. I shouldn't say a ranch. And it was like $1.3 million. Those don't go fast.
No.
So it took him almost 2 years to sell it. They were fine because when HUD takes your house from Medicaid sends a house to the state sends a house to HUD. You realize that HUD sells those homes at like a 30 to 40% discount.
Oh, absolutely.
They lose their shorts on the HUD website because it's a bid process. You bid online, right? Yep. Well, when kids sell the house, they're going to get a better price. They're going to get more money. They're going to be able to pay off the full loan amount, and they're going to keep the equity because, how does that term go, Herdy? Rising water causes all ships to float, that whole process.
Gotcha.
Yeah.
No, I never heard that one, but okay. But that's good. I'm glad you didn't make me finish that quote because I would have been sitting there going, I'm not sure about that one.
Sorry.
That's good. It's good. So thank you for answering that because I think that's been the problem all along is people have, you know, how people are, they get misconceptions about things. And then it gets established in their head that that's the way it is. And it takes some facts and it takes some re-education like we're doing today to
Yeah.
get people to feel more comfortable with something. So
I think there's one other thing that people need to know about this is an FHA loan. I don't know if you've ever bought a house with FHA, which means it has to meet FHA standards.
sure.
And it's an insured product. So if the market were to take a turn, the house is not going to be upside down. FHA covers any
Any loss?
Any loss, right?
Yeah. So
Good.
it's very safe for the heirs.
Right. Right. And the fact that we're talking about, and we're going to dive more into it right here, is I'm sure you guys can tell me you've been in this business long enough that you have some case studies or you have some HECM loan that where you saw significant impact on, as you said, Michael, a client's financial situation because you like to help people. So can you share one with us? Do you have one top of your head you can share?
In fact, we were just talking about that earlier today. So let me give you two examples. So one was a couple who went to a realtor friends of mine's church. Okay. And he met them at church. And the gentleman was on staff at one time. So the gentleman's name, let's call him Carol, which is his real name. And the other lady's name, his wife's name was Melinda. Well, Carol, he had a stroke 2 years prior. And he's a strong believer and he thought he would get through it. Well, he didn't. He's still not quite recovered. He still walks with a limp. He can't mow his lawn. And they lived on a beautiful property with sloped yard, and they had stairs. So they waited and waited and waited, hoping he would be able to handle their house. Couldn't. So we were able to sell their existing home through the realtor, do a reverse purchase or a HECM purchase. So they took their equity from the home sale and put down 60% on the new home, which is a single level ranch with a 3-car garage and his little shop, so they're in a healthier, better place and they have money to boot. She just replaced the countertops and, we do this with new construction too, where they get a picket in the beginning, but it's a really viable tool and seniors need to consider this when their house gets too big or unmanageable for them to downsize to something and keep money in their pocket. With no mortgage payments for life. That's the best part.
Yeah. And I would say that lots of seniors today are considering to downsize simply because where the market's at right now and cost and things. So you're probably in a pretty good market right now for this type of loan once you educate folks how it really works, right?
Yeah. So. And there was one other cute story. I told it earlier today in another group. Her name is Corey. She lives in Conroe, Texas. And she had been a manager at the city. So she had a really nice pension. Well, when I got a hold of her, she had 10 years of back property taxes. And in Texas, that's not bad. They don't take your house, but in every other state in the union, they'll take your house after 2 years.
Wow.
She maintained. She hadn't had homeowners insurance for at least that long. And her house was paid off. But the reason why was she was funding her grandkids' college education at Texas A&M. And one of them was in vet school. So it was a lot of money coming out of her pocket. So she didn't have the cash flow.
Right.
And her and her little dog, Puff Puff, lived in this house that hadn't been worked on or repaired forever. And we were able to do the home equity conversion mortgage for her, pay off her back taxes, pay off her and get homeowners insurance in place, and then set aside a fund in escrow for her for life to pay her property taxes and homeowners insurance for life, right? Now, she could live in the house safely. It had to be repaired in certain spots. Those repairs are done. And she has all the cash flow in the world now because she also has a lump sum setting in a line of credit to help pay for the kids' college.
That's awesome. So went from here to here just by doing not a simple deal, but working out financially how to use this program. That's awesome.
Yeah. It was a blessing for sure. And she sends me clients all the time.
Story.
Yeah.
I bet she does. How could you not?
Right.
why would you not recommend you for doing that? That just seems like a natural thing to do. So, all right. So I know from the business I'm in what this is like. I can tell you right now. Uh, Technology and what I do is very similar to what you guys do, and the fact that there's always changes, there's updates, there's regulations, there's guidelines, and then there's everything changes today.
Mm-hmm.
So how do you stay informed about that? Is there testing? Is there new license upgrades? Is there a combination of all these things?
Well, I have to take regular continuing education, of course, and then every one of our vendors, probably like yours in the industry, will send us blurbs probably daily. Here's the new changes from interest rates, where we think they're going,
Yep.
to the new rules and regulations. You know, a year and a half ago, 2 years ago, we went off of the LIBOR, which was the London's interest rate setting tool, to regular 10-year. So we are on the 10-year bond. So 10-year notes. So whatever mortgages are in the industry, we're a point below.
Oh, that's awesome.
Yeah.
That's good to know. And thank goodness for that, because as you know, they might stay the same for a while. But anyhow, with
They
enough
probably
said.
will.
Okay. You've been talking a lot about seniors.
Mhm.
And I believe, based on what you're telling me, that's kind of where you really like to target your niche, right, for HECM,
Mhm.
although there's other reasons to do this. In your experience, and I like that word. By the way, I like the word experience. Experience is better than in my opinion. Okay.
Oh, good.
So I like the word experience, because experience probably does matter a whole lot in this business. So what considerations with this experience in mind that you have, do they need to decide whether HECM's a good program for them or a good loan for them or not? And I'm sure that you have to sit down with them and process that. So can you fill us in a little bit how that works?
Yeah, sure. Every situation is a little different, and everybody's goals or needs are a little bit different. And I think we should point out, if we haven't said this, you have to be 62 to qualify for this loan. So we're on the cusp, but we're not quite there yet.
Speak for yourself.
Speak for myself.
Yeah,
We're the
I'm
same
there,
age.
so hush.
So you have like Michael's client down in Conroe who had, what she wanted to do was fund her grandkids' education and needed repairs on the house, versus we've had clients come who their house is way too big. They don't want to mow the lawn. They want maybe to be in a 55 and older community and a new build. So there's that group. And then there's a group that I need in-home care. So
Yeah.
I pull equity out of my home, invest it with a trusted financial advisor, take revenue off of that helps my in-home care costs. Those are a couple of things we see quite a bit. What else can you think of, Michael?
You know, the other piece we run across is people who are stuck and they're making minimum payments on their credit card, and the only asset they have, or the biggest asset they have, is their equity in their home. So
Yeah.
It's a good idea for them to look at this, consider it, and sit down with a calculator. But the part I like about this, not only how they plan, and I'll tell you some other stories, but they have to go through HECM counseling, HECM FHA counseling with a registered FHA counselor.
Perfect.
They're going to ask the same type of questions. Why are you doing this?
Perfect.
Do you understand the loan? Because they can't get the loan until they pass that quiz, that test.
And that makes total sense, because now you're getting out of the world of somebody might be coming in and take advantage of you. You're there. It's kind of a double check system. You're working with them. They're working to find out, to make sure you're working with them the right way. So that's great. Really.
Yeah.
I did not know that. That's really good.
And I've had people who are investors as well.
Yeah.
Oh, yeah.
Not just people who have tough finances, who are investors.
I bet.
And they use the equity in their home to make investments.
I bet they do.
In the stock market, but I've had a guy who is a developer, and he quit using the banks and his hard money lending friends, and he uses
an
his own
alternative.
money.
Yeah, an alternative lending method was his equity. That's
Yep,
brilliant.
pulls it out, no payments, remember, and then he makes his money and puts the same amount back in.
Amazing.
Yep. So he doesn't close the loan off, and the smartest guy I ever knew, he ran the San Diego bond desk and bond company. He said this was a loan that he didn't understand why more people didn't use. Where else can you use your equity and turn it into tax-free money and never have to pay it back?
All right, gotcha. And with everybody today in our inflationary economy, which prices now have gone up, they're stayed up, even though and inflation's going back up.
17.8% is a
Well,
real inflation.
my point is people are starting to live off their credit cards, unfortunately,
Yeah.
and they have to pay that somehow. So for seniors that are there, this might be a good time for them to look at HECM as an alternative to equity. So, which kind of leads us to kind of the next question. And there's strategies, I guess, to effectively communicate the benefits. And let's face it, there are potential drawbacks, right? Nothing's perfect in this world.
Right.
So what are some of the benefits? We've already talked about those. How do you communicate the benefits? But how do you also look at potential drawbacks of a HECM loan with clients? And then I'll ask the next question, the follow-up question, once we get through that. So which one do you want to take that question?
You can take that one.
Julie or Michael?
The strategies to effectively communicate?
Yes.
So, there's a website that I send all my clients to, and it's on my email, or excuse me, it's on my website address. I send all my clients to the HUD website, HUD.gov.
Not to this one, but to the HUD.gov. Okay.
But my HUD.gov is on my website.
Okay, gotcha.
Okay.
Gotcha.
And I have them
There's a link on that one. All right,
Yes.
gotcha.
I have all the rules posted on the site.
Okay.
I have them read through that and then call me back and ask me any questions, or at the next meeting, have their kids there, ask the questions you need answers to. Because if HUD didn't answer it, I don't know if I'm going to be able to, but I do my best.
Right.
But I want them to be educated on how this works. And if we can just educate more seniors how this works and get rid of the myth of Sasquatch, they can then share it with their friends and neighbors, because we all know not everybody's in the top 20% financially. There's a lot of people in the lower 80% that we know who need help. And so that type of education, Julie's also doing a lot of advertising, and we're launching a lot more of that. And she can tell you a little bit about how that's going.
Sure.
What she's doing.
And so what about where do the potential drawbacks come in, if you don't mind me asking?
Oh, here's one. The HECM loan will allow you to put your non-borrowing spouse, not in this state, but in every other state in the union. So if one spouse, let's just use this example, Julie's 70 and I'm 50. Well, I'm not 62 yet, so I can't be on the loan. But since we're married, I can still live in the home.
Gotcha.
And if she dies before me, I can stay in the home until I die or reach 62 and put it in my own name.
Gotcha.
The title, the mortgage.
Sure.
So that doesn't work in Texas, and that's a drawback here in the state.
All right.
But I think the other drawback is this. I've done this where the daughter lives with mom and dad, or the daughter lives with mom to help take care of mom, and the daughter doesn't have the income, but she's being the caregiver. And if she's not 62, we can't put her on the loan.
Gotcha.
So that's a kind of a bad situation.
So but that's discoverable during the process when somebody asks for your help, right? So it's not a drawback in a sense, it's a negative thing. It's a drawback that there's conditions that may keep somebody from getting the HECM loan, correct?
Right. Yeah.
Okay. Gotcha. All right. So how do you assess a client's eligibility, suitability for a HECM loan? And I guess what you're saying is, are you eligible?
So how we assess it's pretty easy stuff. We look at their Social Security income last year and this year.
Gotcha.
And any other fixed income.
Right.
It could be rental income as well. And so if they're still employed, we have to look at their W-2s, but we assess them and qualify them on their fixed income Social Security. So the threshold is low.
Gotcha.
If you want to buy a regular house with a regular mortgage, you better have a good DTI. You better have 50% income.
Big money down, all that stuff.
And have huge cash flow. Right. So that's how we assess them financially. We also look at their spending habits, how many late credit if they have any lates on their credit reports, how many dings there are, because FHA will not allow more than 4 dings. Okay.
Right.
But once that's assessed, that's the financial side of it. Once that's done, then we can qualify them after they go through the HECM reverse counseling. So I look at them financially to make sure they qualify. I call it the cat food rule.
Sure.
So you have to have enough income to be able to still pay your property taxes and homeowners insurance on your own and not have to eat cat food. So
Gotcha.
that's
So
how
so
we
is
do
it
it. The other thing is their mental health. Do they understand what I'm saying? Can they understand it? And if they have dementia, I have to back away. We have to use a power of attorney because they have to qualify through the counseling and prove they do an acuity test through the counseling as well
sure?
to make
So
sure that they're mentally there and that they understand what they're doing and they do not have dementia.
yeah. And I would say that people need to understand that when you're asking for that information, that it is a loan. So they have to go through certain criteria, your income verification, and all that stuff to prove where they're at, right? Because they are borrowing, in a sense, a loan. So there you go.
Yeah.
Okay.
Yeah,
And
and the standard.
I think that confuses a lot of people too. That you just don't say, well, you got a ton of equity in the house, although that's it, right? That's what you're getting to. You just can't say, well, I can take that out. Now, unless you can take it out, but you can't keep the house. You have to pay a second lien, correct? So if somebody wants to borrow their own equity and do it for whatever they want, they still have to pay back the original house loan and the second lien now that's on the
Right.
house and that loan, whoever they're going to owe back
Right.
that money. Okay, gotcha. All right.
So we can do HELOC loans as well, which
Yeah,
sometimes
good,
what we'll do, home equity line, but they have to
good.
be able to pay for it. You know, it's all down
Yeah.
to what's your cash flow like? Is there too much debt?
Well,
And can you afford it?
let's welcome Jordan. Jordan just showed
Jordan.
up
Hey, Jordan.
I was just here crashing the party.
that's all right. I told him that I told him you double booked and you didn't mean to, and it happens, because we get busy. So Jordan, we're down on. Let me bring up the next question here, and I'll ask it. But we're getting toward the end here. Can you provide us, either Julie or Michael, insights into current trends, developments of the HECM market? It seems like for clients to be aware of what's happening out there that you see that clients should be really careful.
So one of the things I'm seeing is the prognosticators who are prognosticating interest rates.
Right.
And I can do regular loans too, but I don't want to. I try not to. I try to avoid them like the plague, especially for seniors. And so the prognosticators are saying, "Oh, interest rates are going to go down. They're going to go down." Well, interest rates are too political, and the chairmans and all the committees, it's very political. So even if things happen that hopefully will happen, we're not going to see, 1% drop. We're not going to see 2% where it's affordable for people again. Because the reason they keep interest rates up is so they can have ability to charge more interest on taxes.
Interesting.
Yep. It all
Yeah,
comes back to the feds wanting to be able to tax you more at a higher rate.
Yep. Okay, gotcha. That makes total
So
sense.
that's one of the
too.
things. The other,
I mean, you think?
yeah, no kidding. Yeah. And the other thing that seniors need to be aware of is really what Julie has a heart for, which is how do you downsize correctly? Okay?
Yeah.
Don't get forced into a loan. If you don't have long-term care insurance in place or $200,000 in assets or more, don't cash out your house.
Yeah.
Use the HECM loan to keep some money in your pocket, because when you fall and break your hip and you're in the hospital, since 2008, since Affordable Care Act or Obamacare or whatever you want to call the stinking care we have out there, that program, you have to prove that you have long-term care in place if you're in the hospital and you need to go to a nursing care facility, or
Right.
$200,000 or more in assets. Because if you don't, they make you sign right then and there a Medicaid attachment
Yeah.
to attach your home to pay for your nursing care when you die. So downsizing is really, really important for seniors because they're going to need to do it unless they have the perfect house.
Can you go into a little bit more detail of that? Because I don't think a lot of people are aware of that. And that's a really big deal.
Mm-hmm.
The Medicaid issue?
Mm-hmm.
Okay. Yeah, I'll walk through it slowly, and I'm going to give you some criteria that's going to blow your mind. So let's talk about Medicaid for seniors. Okay, Medicaid is when the state says you don't have enough money to pay for whatever you need to get from us. So let's call it Medicaid nursing care facility. So again, grandpa falls and breaks his hip. Okay, and maybe his pelvis at the same time, which happens. So he has to go into a care facility, and if they can't prove that they have long-term care insurance in place or $200,000 in assets they can spend, then you have to sign the Medicaid attachment, which means the house goes to the state when you pass away.
Wow.
Then they also make you spend down. It's called a Medicaid spend down. They make you spend down to $2,000 left in your savings account, a wedding ring, and a car. All of their assets have to be sold. They make you a pauper, but you do get $113.58 a month from your Social Security check, but they'll take the rest.
Yeah.
Hey,
So
nursing care facilities are expensive.
Mm-hmm.
Okay, you have to pay the staff.
Oh,
That's
yeah.
why I team up with in-home care providers and help them get their clients financing so they can stay at home and age in place at home. Because Medicaid is stinky, and that's why they made all these rule changes again. Remember, they killed the reverse mortgage in 2017 so seniors can use their equity to age in place. Now, ask me how much equity is in seniors' homes, people over 62.
How much?
Okay, thank you.
What's the percentage, Michael?
Percentage, it's a dollar amount. You ready?
Yeah, I'm ready.
12.48 trillion with a T.
Wow.
Wow.
So
ask me how many homes are lost to Medicaid.
That
40% of them.
So
40?
40.
Yeah.
So the state
4-0.
That is
wow.
All because they believe in Sasquatch.
Well, and it's preventable. That's the thing. It's preventable. They can have a better quality of life. They can stay in, no, you don't want to be in a Medicaid facility if you can bring a nurse in.
No.
You just don't. And most seniors, I mean, I think about my grandparents who recently passed away. They didn't want to leave their house. They wanted to stay there. And they didn't want to leave. They don't want to go.
Right. Yeah. My mom is, just to give you a story, my mom's 90. She did fall and break her hip. It's fixed, and she's tough as nails. But she lives at my brother's house because they want to make sure they can keep an eye on her.
Right.
Okay.
Right.
And the cool thing is, because the way she's set up medically, she has care that can come in and check blood pressure, nurses and stuff. So she didn't have to go to a nursing home or an assisted living facility or anything like that. So there are things you have to do. People in their 40s and 50s, I'm just going to say this as a testimonial. They need to get prepared.
Yeah.
Yeah.
They need to start thinking into long-term, what they have to sacrifice to get all that, because it's worth getting it as opposed to not having it at all, even if they have to give up something else. And that's just my personal opinion. So, I mean, that number you just shared, that's crazy. I don't think I even knew that. I can't imagine that happens to that many people. But then again, how many people actually have a savings account and can live 6 months if something happens to them? Anybody.
Who owns the majority? Who owns the majority of the homes? Seniors.
Yes, and the baby boomers, retiring at 10,000 people a day, are having to apply for Social Security, and even if they get mandated, they're still having to wait till 72. But at least they're still in that coffer for being out of the 10,000 people a day, or a week or a month. Maybe I've got that wrong. I can't remember it. So to me, this seems like a great thing. The HECM Loan Program. So if you guys, and I put it up here, want people to reach you, contact you, ask you questions, start this process, I put the website down here. Is this the absolute best place for them to get a hold of you? So they can go in and click links, or at least start the process. Is this it?
They can review all the videos. We have similar videos to this discussion.
Perfect.
They have a appointment calendar setter and my phone number for contact information. Of course, all the current NMLS disclosures for every state, and that makes it important. But I want to get back to one other thing we were talking about.
Sure.
As a financial advisor with my wealthier clients, I would always ask them this question. And they were usually in their 60s already. So back in the day, though, this was in the early 90s, there was a lot of long-term care insurance providers. Okay. But I would ask these clients, and I would ask you guys too, this. If you've insured your home and you insure your car, and we maybe even insured some of your portfolio with some options, some puts or something like that, so when the market goes down, you still make money. What are you going to do to insure your estate? When they always said, what? I said, well, if you go to a nursing care facility, that's cash out of pocket payments, right? Unless you have long-term care insurance. I said, would you like to pay $6,000 a year for long-term care insurance or $6,000 a month for the care home?
Yeah,
You choose
exactly.
today. They say, let us see if we can get it. Let's see if we can get it.
I mean, it's an affordability thing for a lot of
It
people with the inflationary time. So they put it off thinking that, there's another day that this will be better and things will be better. But as we know in life, things never get better. They never improve to the point. It's always going to be that issue. So that's what I was saying. You have to go back and sacrifice something in order to have something more important. Okay. And those are hard choices, but they have to be made. And that's good information. Jordan, what do you think?
Yeah, I think that's incredible. That's I'm really into real estate, so the Medicare part is I don't think enough people are aware of it, and the just how vulnerable their assets are to just.
We're coming in and out.
Hey, your guys are going in and out. That's fine on your end, but it records everything, so we're not missing anything. So don't let that bother you. It's okay.
Has and can
it's just a
afford
bandwidth
long-term
issue.
care insurance.
Right.
Okay.
5% of the nation can afford long-term care and health.
Gotcha.
The other point that I want to make is that we have 20%, 50% less carriers out there who will write long-term care insurance. There's really only we'll still do long-term care in seniors. Statistically, that's 70% of seniors fall and break their hip and have to go to a nursing care facility. Mm-hmm. 2 of those seniors had enough assets or long-term care insurance. The other 5 out of 10 seniors are losing their homes today.
Wow.
To nursing care bills.
It's crazy.
And this is a solution. This is like long-term care, where you use your equity to pay for your care. And it's far cheaper than premiums for long-term care insurance. I hate to say that, but it's true.
All right, guys. So we enjoyed having you on the Mansfield Biz Buzz today, the both of you. Thank you for sharing your extensive knowledge. And I will say this, I learned some things today I did not know, and that's awesome. That's the whole point of this. We want people to enjoy this. So let me go over here to my brand. And guys, did y'all enjoy it? That was going to be my next question.
Yeah, really fun. I wouldn't.
Okay.
Great. Yeah, this has just been really, really fun.
You want to hear the kind of music I'm going to take you out on?
Yes.
Yeah, little beats and music. Anyhow, we discussed HECM Loans today. Jordan came on late. He'll be back next week because we're live every Thursday from 2 to 3 on the Mansfield Buzz on YouTube, Facebook Live group. So, guys, we had Julie and Michael Standard today talking about HECM Loans. We'll see everybody next Tuesday. Have a great day.
Thanks, guys.